Jon Robinson, CEO of the Colorado region for UMB Banks in Colorado. How I see the state economy, and I'll stick predominantly to the Front Range, as that's where we have our banks are located, in the Front Range. We haven't made it to the western slope yet. But I would say the Colorado economy on the Front Range is growing very nicely, and I would say led by energy. In northern Colorado, the energy market is booming. So if you're in the energy business, that's where you want to be. And that'll drive substantial revenues, it'll add jobs, and a lot of taxes to our tax base here. And then second of all, housing and construction is taking off because of that as well. I believe over 40,000 people relocated to our state last year, so they need some place to live. So our housing market is very, very tight now, so if you're in the market to sell a house, now's the time to do it. And then also our regulatory environment as it relates to condo construction, that's non-existent right now, and I know the state is looking at that to try to fix that problem, but that's a serious issue as it relates to housing. And also on the commercial construction market, that's doing extremely well, as evidenced by probably a dozen or more cranes just in the downtown area. So construction and energy is really the place to be right now as far as adding people, growing revenues nicely. That's where you want to be. The commercial lending environment in Colorado is actually very strong. As evidenced by our numbers, we reported close to 16% year-over-year growth in outstanding commercial loan balances. A lot of that is driven by twofold: customer acquisition on our part, but also our current customer base is borrowing more money, which is a very good sign. They're not hiring as many people as what you might imagine. Revenues are ticking up, but I think because of efficiencies, they're able to handle that with their current staff. But they have delayed, many companies had delayed replacing fleets. Say they were on a normal 3-year replacement cycle. As they went through the Great Recession, they may have pushed those out to 4, 5, or 6 years. That's catching up to itself. So people are now being forced to replace fleets, and because they're growing revenue, they're actually adding to their fleets as well. So we're seeing that increased loan volume because of that. And also the low interest rate environment. Companies are still interested in buying real estate, so expanding their plant, buying a new office building, and that's driving loan growth as well. The low interest rate environment right now is still driving volume, and most people believe, as well as I do, that interest rates have to go up at some point. We're just not sure when that's going to be. For our budgeting purposes, we're not forecasting rates to go up in 2014. Looking into 15 or 16, we believe there is going to be pressure to raise interest rates. So we're recommending to our customers to lock into fixed interest rates that may have been floating for a period of time. Now would be a good time to negotiate a fixed rate, so in anticipation of rates going up.